Oh, good afternoon, everybody. Hope you're well today on this Thursday morning. G'day, Shane. No worries at all. Hey, Ross. G'day, Keith. How are you all? Let me know you can hear. Afternoon, Rachel. Let me know you can hear and see me okay. That would be great. And we'll get things kicked off. Fantastic. Thanks, guys. Of course, just to remind you of a couple of key messages. Of course, we're in the business of looking at live markets. So just bear in mind, these are for educational purposes only, not direct advice to take trading action. You've got to make your own decisions based on your own trading plans, etc., relating to anything that you see or hear. And secondly, of course, these are my opinions, not representative of Go Markets necessarily. And so please, again, bear that in mind. Hello, mate. So let's have a look at what's going across the news right now. It was a mixed session on Wall Street last night, with the S&P being the index that outperformed, eking out record close again, though only very slightly, of course. The US futures are trading to the upside and are gathering a little bit of momentum, somewhat surprisingly. And Asian markets haven't responded particularly well to that. Looking very mixed at the moment. The ASX is going very well. The Nikkei less so. Let's just check on it in there and see what's happening. So if we quickly look at this, you can see the Nikkei is down, as is the Shanghai. Hang Seng's bounced back after yesterday, and the ASX is an outperformer. So that's where we're at. If we look at the futures, you can see they're all in the green at this stage, and they've gradually crept up as the morning's gone on. In a couple of things to note, European futures are higher. VIX is just continuing to go lower as markets feel very comfortable. We're now at lows we haven't seen for a long time. And we've got lean hogs doing very well, obviously, but copper's sort of around neutral. Precious metals are still looking ordinary, but we'll have a look at charts in a moment. In terms of the currencies, there's not a lot of movement. You can see here, we're all pretty flat across the board. So FX markets are possibly on the long term, and even in the short term, are going to be difficult to eke out some gains from, potentially over the next couple of hours until we get some more news coming across the wires. So that is relatively interesting. You can see oil's come off a little bit. We've got crude, the WTI crude contract dropping below 60 bucks, and Brent dropping again towards that 60 level. In terms of what's driving this, well, look, the Fed minutes yesterday sort of confirmed that, confirm their sort of accommodative stance for the foreseeable future. We are also looking at a pretty neutral day on precious metals as well. And despite my, whoa, that's a little bit of an error. So in terms of economic data, we've got very little going on today as well, until that jobs report comes out later on. Whoops. There we go. We've altered the spelling of earnings season prep. It is US earnings season next week. For those of you less familiar, that comes along once every quarter for about 3 weeks. Most of the constituent stocks of the S&P 500 will be reporting, and this tends to have a fairly major move on markets going forward. And so because of that relationship between US equities and the US dollar index, then we could be in a place where we get a major move on Forex next week as well. We've got in terms of how to prepare for this, what we'll find is as the first companies come over, which are usually the banks, just prior to that, we'll get possibly a little bit of repositioning and maybe a little bit of caution. Obviously, the market is a little twitchy about where valuations are right now, and it's going to take a relatively good earnings season to keep the market buoyant where it is. However, having said that, the forward guidance given last earnings season was still very muted, very conservative. So there's still plenty of potential for surprises to the upside. So that's where we're sort of positioning ourselves for right now, but it may be worth just thinking about that at this stage in terms of your behavior, not only into the end of the week, but also the early part of next week. Let's look at some economic data just to confirm. Very little going on, as I said. We can see here we've got initial jobless claims. There's the weekly employment. We've got some PPI numbers coming out of the ECB, but out of the Eurozone, but that's not really going to impact on much. The 10-year bond auction, 10-year treasuries are the one on which mortgage rates are often based in the UK, is coming out. Unlikely to affect treasuries globally unless there's a significant move. And then we have got the Fed Chairman Powell having a chat to Congress again about monetary policy, and so that does have the potential to move things a little bit later on in the day, but you can see it is very late on. So not a great deal to get excited about in the economic data front. So let's have a look at some charts and see what all this means. Here's the US 500 daily. So there we have the record close from yesterday, and you can see that move here in Asia today. So I'll just put it on a 50-minute chart just so you can see. So this is what's happened since Asian Open. Okay, so we've got a nice move higher on this, and I'll show you the Nasdaq as well. Very similar picture. The Nasdaq has got some ground to make up. If we look at a daily chart here, you can see we crossed that 13,600 level that we talked about on Tuesday. So it looks as though we may be up to testing record highs. I wouldn't be surprised to see this move up to that point between now and the start of earnings season. Tech companies generally report in week 2. We get the big boys, the Apples, the Microsofts, the Facebooks, all releasing earnings in week 2 of earnings season. So a couple of weeks away yet. But so I wouldn't be surprised to see us just push up to that level. There's certainly an appetite for tech at the moment. We'll have a look at some individual stocks later on. Look at the US dollar index very quickly. You can see we came down and tested that 92.50 key level that was resistance here in early March. We went higher than that, broke through the 200 MA, then came back through, and we look as though we're just back at that 92.50 level in Asian trading this morning after a better day yesterday. And consequently, of course, we've got gold and silver both stuck at key levels. You can see gold there. We've got this long-term double bottom that's been potentially forming. But those of you who were on the session last night, we talked about a bounce strategy. This would be possibly a perfect setup for that once it engulfs that green candle there, if indeed it is going to do so. Silver has been playing with this $25 level now for about 5 days without significantly breaking through. Looked as though it might have a pop at it yesterday on the day before, but you can see in Asian trading that we've just dropped back again to 25. So again, nothing there for right now. And this is going to be a theme we're going to see when we look across FX. So if we look at the US dollar yen, you can see how we've come down to a level with that US dollar weakness we had earlier in the week. We've just come down to a level around this 109.70. It looks as though we've found a sort of support there. And likewise with the Euro USD, looked as though we were going to break through this level yesterday when we were doing we were actually higher above that key level at 118.77 in yesterday's trading when we were doing the Inner Circle webinar, but you can see it did drop off. Look at the hourly chart, just dropped off and drifted back downwards. And now on the hourly chart, we're in an interesting level. So trading within a relatively tight range of around about 13 to 14 pips. If we do break that, this could be interesting, okay, because we had almost an unstoppable run up over the course of 7 or 8 hours a couple of days ago. So it wouldn't be surprising to see it sort of pop down to this level. So this could be one to watch, around 40 pips in this as a trade. We'll look at the Aussie yen, again at a key level after some general weakness in the AUD following the RBA non-intervention earlier this week. So that 83.50 is important. Again, if we look at the hourly chart, if we do get a breakthrough here, the next level down, sorry, I put it on the daily chart. You can see where the 50 moving average is, so around about 82.50. So possibly a big move down, although we could see a pause that's less attractive down to maybe this level here at around 82.90, but that's still 60 pips to be grabbed. So if we put this on a, there we go, put this on a longer term, sorry, put this on an hourly chart, take it out a little bit. So really we're looking at this level here on the hourly chart, a break below 83.45. This is our chart of the day for FX. If you're a short-term trader and a potential move down around about 50 pips to this next more established support that we put on the daily chart. GB pound, US dollar, looks like a bounce potentially going on here on the hourly chart off that key level, which again we can sort of see on the daily chart. This was the lows we hit early, sort of mid-March, and we tested this level that we're trading at now towards the back end of March, and you can see here we're just going to get rid of that line because it's getting in the way. So what we're doing is we're putting a line of interest. Mike, move it. There we go. Putting a line of interest around about that 137.53. So if we look at that again on a short-term chart, you can see how it's tested below that. Looks as though it could be moving back higher again. So if we get a break of 137.53, that could be interesting to the tune of around about 35-40 pips. GB pound yen, very similar picture. Let's just bring it in on the daily chart there. You can see same trading around a key level, which you can see there. So we're waiting to see if there's going to be a bounce. So it's sort of timely we did that yesterday because there's quite a few potential setups if, of course, you've followed through and put your plan together accordingly. But some good testing going on. Now, if you want a longer term, sort of trade, the US Canadian dollar was looking interesting at this level here on the daily chart that it's testing right now. So 126.20 is the level of interest. So this is we're going to give you an extra bonus chart of the day. This is it for a longer term trade for about 90 pips on the US Canadian dollar. I wouldn't expect this to move up quickly, but certainly worth possibly keeping an eye on going forward. Feel free to pop up anything that you think you wouldn't mind a look at. More than happy to look at anything. Now let's look at the ASX. This is interesting because we had a little bit of a landmark thing going on yesterday, and this may be part of the reason we're getting a little bit of a pop in Australia today. So if we just put this on a line chart, we talked about this yesterday. So we had a level there at 6,900. You can see we tested it 2 days ago and failed to hold, and then we closed above it yesterday, and then we're seeing follow through today. So the fact that we've broken out of a range to the upside on the underperforming market in Asia. So we've been in this range really since the beginning of the year. Looks significant. And as I said, that's possibly supporting what's going on right now with the ASX generally. As well, of course, as the data coming in okay. So let's look at some individual stock. We'll look at the index as a whole first. Just bring it up and just see what we're seeing. There we go. So you'll see we're trading towards the high of the session. Towards the high of the session there. And if we look at advances versus decliners, we're about a 3 to 1, a little short of 3 to 1 advances versus decliners, which suggests this broad-based rally. There's certainly some sectors that are doing well. Resources are playing catch up a little bit, as are banks, which have had a bit of a rough couple of days. Afterpay is continuing to move higher. We talked Afterpay the other day. You can see BHP up 2%. You can see Bank of Queensland up, CBA up. So banks and resources leading the charge. Go down at the bottom. Some buying coming in, some more buying coming into zero, which just continues to go higher. And the other sector that we're interested in was, of course, the travel sector. We can see Qantas trading around about 540 at the moment. We did trade higher than that yesterday, but fell back after Scott Morrison was waxing lyrical about vaccine availability in the US, in Australia, that isn't coming from the Eurozone as promised. If we look at healthcare underperforming there, Sonic, there's ResMed. So we're sort of seeing a general sort of weakness across healthcare, with the exception of Fisher and Paykel. That's an interesting bounce. We'll have a look at that in a moment. Retail slightly up, but they're playing catch up a little bit. So let's just have a look at some details. So if we look at Qantas first of all, there are two reasons. Obviously, Scott Morrison yesterday, you can see the high of the session closed in on that 549, potential resistance there, and subsequently dropped back down. We did have that higher open today. We're trading around about 541 right now. It's up slightly from yesterday's close. Two things could happen here. We could get a bounce off that. So you can see we're accumulating into this position. So we'll raise a stop up on this, maybe rip both of them off if it doesn't look as though it's going to pop this, and then potentially look to re-enter. If we do get some momentum that takes it above this, then of course we can accumulate again, just to back up what we were talking about last week. PLS had my attention yesterday on a break of this, just a little shy today, but still looking okay. A break of this. Look, if we take that as the high from yesterday, the close from yesterday as the potential move high, we've got about 16% up on that. Pilbara Metals and Galaxy are the two stocks that really are sort of are the major lithium players, and with electric cars coming on board, it's a bit of a long-term fundamental play. Galaxy are the other ones, which no harm in checking in on Galaxy and see what they're doing. But you can see again, we've got a key level there that we need to break through on Galaxy. XRO has been another story we talked about when we met on Tuesday. There were 4 positions open, took a couple off to reduce risk, and you can see that that's continuing to look strong. And there may be a pause around this 140 level, so we're keeping an eye on that. And may again just take something off before the weekend or if it gets to that takeoff and reset on Monday. Some others that we've been looking at, Seek. We talked about Seek on Tuesday. There was Tuesday's session when it broke through here. And of course, since then, it's gone up quite considerably. There's still a fairly, from now, there's still a fairly healthy, almost 4% to the upside on this, but it's a stock that looks pretty strong. Now, Wesfarmers were another stock that we checked in on. The only issue with Wesfarmers, which appears to be creeping up again, is this limited upside compared to some of the other stocks that we're looking at. So if we get a break of this level that it seems to be stuck at around about $54. So let's say we've got an around 54.28, limited upside around about 2% till it pauses again. So maybe better opportunity than that kicking around. Just looking at questions. ALL, yes, Ross. Let's have a look at ALL, which I know is of interest to you, mate. You did pop this up on Tuesday and I followed through on it. So let's just see what shape the world is in AAL. And look, it's been a bit of a great start. Started up around about the 3% level, and then looks. But within that first 5-minute bar, dropped down to around about 36.75, and dropped down further. Bit of short-term profit taking, but you can see since then we've gradually returned to normal, and we are actually up compared to the open now, which is a relatively positive sign. We'd like to see it just push a little bit higher to suggest that there's more upside in this, but you can see how important this level is that it's just crossed. If we put it on a monthly chart, that was the 36.26 level was of interest. LYC for Michael. We're still stuck. We've been stuck here for a few weeks now. So we're still not really enthused about LYC in terms of a new entry, unless it breaks that key level there. You can see how often it's tested this throughout early March and also early April. We've been at this price level for the last 3 days. So that again, we started higher as we did yesterday, but we just drifted back to that level. But a nice move higher potentially of around about, if I remember rightly, it was around about 3 or 4%. Yeah, there we go, from where we are now, if we get that move higher. But this is not looking like a compelling reason to get in right now. Might be a little bit of patience is good. We've been tracking Woolworths. So we'll just have a relook at Woolworths, which is interesting as it's now testing this 41.70. We've only had one candle close above this. Could be a potential long-term hold, but certainly looks okay at this stage. We'd like to see it close above the high that we hit in January to get excited about this going forward. In terms of the banks, Macquarie is looking interesting, very interesting today. Just put this on a line chart. You can see why this is looking interesting. We had that 155.50 level we've been talking about for a little while now. It's had 3 pops at it now. Look at the candles, you can see it's traded above it a few times. So this would represent a high close that it is at now at 154.25. So this is going to be our stock chart of the day. It will be one we would be very cautious with in terms of what things drive it. Is obviously more investment orientated than perhaps the major banks. So if we just pop in, we'll just check in on when. So if we just put in just going to send you this link because this is going to be important over the next 3 or 4 weeks, particularly if you trade in the US, but it also is going to have implications in Australia. So there's the link to the Yahoo earnings calendar. So what we're going to do is we're going to see when JP Morgan, or in fact what we'll do is we'll just pop it forward just to show you that we're just going to get a ramp up of earnings. Let's just have a look at the JP Morgan. So JP Morgan are going to be interested in the same sort of investment orientation, and there is April the 14th. Okay, so with a Macquarie trade, then you would have to be aware of this going on. This will not only, JP Morgan's results will not only influence the banks in America, but because it's the same sort of bank, then, or the same sort of portfolio as Macquarie with a heavy trading and investment arm, then you could see it move there. So that would be just one thing I would just be aware of if you are looking at Macquarie. But keep that link for the earnings season going forward. That could be useful. But nevertheless, for right now, it's looking pretty strong. Let's just check in on BHP just to get a feel for where the resources are. We've got a nice bounce in this today. There we go. After really sort of being quite shy, but if we just put this on a line chart, you can see quite clearly where the resistance is, and we're really sort of trading up to that. So this is a really important level for BHP. You can see how it was resistance here, support here and here, and it's retackling this level now. So we're going to break above that. We could move back up towards this $49 level. If we just look at Oz Minerals as well, which has held up relatively well compared to BHP. The only reason this isn't charted today is that candle that we're seeing right there. Okay, so we've got an engulfing bearish candle. So we look, after we broke through here, that would have been an attractive potential trade, but you can see it's not gone anywhere in the last couple of days. So really we need to see a further push higher to have evidence that this is going to move higher from here. Sorry, I've lost. There's Sensor Group. We did have a look at these, but really this is not a nice chart. Don't like it. Let's move on. Stuck in a range and really sort of midpoint. Don't look as though they're going anywhere. Right, let's have a quick look at the US now. I want to start with Apple. We've been tracking these for a little while, looking for the right place at the right time. Okay, so we'll just put it on a line chart, and you can see how this was a key level right here, where it closed last night. Okay, resistance, support, support, resistance, and we're back here again. Okay, so we wanted to be patient. We did see this double bottom going on here, but with this line here, we said wait technically until it challenges this level here. So that is one to watch in the US, and because of where it finished last night, we're making this our US chart of the day, but just a couple of others to have a look at. We're popping on NVIDIA, which we like a lot, and we are actually in a position here. If we just sort of put it on here. Okay, so we did get into NVIDIA on a break of this level here. We got caught a little bit on it, on that candle. We entered early and it just faded back a little bit, but since then it's gone high. Now, NVIDIA look as though they could be up to challenge 581 as the next level. So that would be a potential pause point, but after that, of course, we're re-challenging 600. Anthony, could have checked Qualcomm. Yep, for sure. The daily seems to be double bottom, but oh, that's interesting. Okay, not it. Let's try that again. We'll pull a Qualcomm chart on. Whoa, just let it catch up a bit. Okay, so let's put it on a line chart. But so absolutely, we've got this sort of double bottom on the daily chart. Which looks as though it was reversing. Looks as though it's pausing at this level, which we would possibly expect it to get up, possibly a little higher than that, up to here. But on the weekly chart, you're suggesting it might be a double top. It was a double top, undoubtedly, okay? But if you look at what's happened on the weekly chart, we've come down, we've tested a level, and we've bounced off. So this essentially is a trend reversal. So we had a trend reversal, number one. I'm just going to change the pen color. So we had trend reversal number one with this double top here, okay? And now the jury's out. So not surprisingly, so it ducked down. What's that? Around about 10%, a little more than 10%. Like most of the Nasdaq did. So remember, the Nasdaq was down 11% in total during February on that bond yield rise. So that was what the rest of the Nasdaq did, and like the rest of the Nasdaq, since then we've had a bounce up here. So we've got another trend reversal here. This is more a rounded bottom type shape. Now, how long this lasts, as I've said, I suspect that this previous confirmation point on the weekly chart may be, if we just go back to our daily chart. So there's the lines. Let's just get rid of those drawings. So you can see that double top there. You can see that rounded bottom, which on a daily chart looks like a double bottom, but there could be limited upside to around about 144. So that isn't really very much at all. And that again, so that's about 3%. Let's just double check back on the Nasdaq. Just see how high the Nasdaq is off its highs. Possibly a little less than that. Just bear in mind, of course, I'm going to do it from yesterday's close, not today's futures contract. But there you go, about 2% on the Nasdaq. So it's tracking the Nasdaq pretty well. So yes, there was a weekly double top, but there's a rounded bottom now, which is going to take it up. It may be that long term on a weekly chart, it is a retracement, but we're not going to know that for a few weeks yet as to whether it's going to work its way through that key level. But certainly an interesting chart to have a look at. And thanks for raising it, Anthony. That's awesome. Okay. Just checking that I've answered or looked at all the charts you wanted me to. I'm just quickly having a look through. Bank of Queensland. Okay, let's have a look at Bank of Queensland. Okay, Bank of Queensland. Yep, sure. It looks. Let's pop it on a monthly chart just to get perspective. So Bank of Queensland has really underperformed a lot of the other banks. Certainly it's underperformed the big four. I would suggest that this hasn't got about $1.20 upside, which is a good return. But that's I don't even think there's that in it. I think you might be stuck at 920, which is about 5%. So I would be, you can see how much noise has been around this level. So the fact that it's challenging this level here, it sort of feels a little premature to me. It would need to break that 872, and as I said, then we've got limited upside to that 920 level. So it's potentially not a bad trade, but again, I would reiterate the comment that I made earlier about Macquarie, though it's not, because of course there are some standard banks, the Wells Fargo and the excuse me, the Bank of Americas and what are the Morgan Stanley are all reporting around the same time as JP Morgan. So as a long-term trade, I wouldn't be interested in. As a short-term trade, see if it will rock up to 920 and that 3.5% or so, then possibly. But it isn't there yet. That's not a breakout in any textbook definition of it. So I would be cautious until, if you were to put a half an ATR on it, for example, let's do a 6. So it's not much. It's about 15 cents. You'd be looking maybe for 880. But it just looks so noisy around here that really I think best one can hope for is a move up to 920. I think there's better opportunities, to be honest. Given a choice between this and Macquarie, I think I'd be pretty stuck in Macquarie. Let's just have a look at ANZ. Now, the difference between ANZ and Bendigo is with ANZ, you'll notice that, again, we're looking at a breakout. This is a far, far better chart than Bank of Queensland, okay? So we've got a resistance level here. So like Bank of Queensland, still got a little bit of work to do. It has touched it in trading today so far. So that $29 is important. But if we sort of put this back on a monthly chart as well, you can see the upside is potentially more than there's no short-term 2% block that we can see here. So what some people do if they see this is they'll look at where the last resistance is and suggest that, well, look, there could be. So that's 5%. So what people will do is they'll say, well, look, if the last range that it was trading in is 5%, then it's probably legitimate, or it's potentially legitimate to do exactly the same. So a target of around about that 30, 50, 59 levels. About there-ish, okay? So if there's an absence of, that's one way of sort of suggesting where the next pause will be if you're in blue sky territory. I hope that's sort of useful, but ANZ looks a better bet than me, better bet to me than Bank of Queensland. No, I think we've done everything that we talked about. All good. So look, thanks guys. It's always awesome that you guys participate. It's fantastic. Really makes a difference. Just something to pop in front of you. If you're not registered for this already, next week we've got on Tuesday, as well as that reminds me, I've got to put in another session for next week. Oops. I may have to redo that. Actually, give me a second. I can't do it. Okay, so there'll be a new email coming out about the live market update. In fact, what I'll do is I'll create it right now so you can register, because I don't think I can alter that. So we're going to do this. So what I want you to do, if it's okay, is just register for next week's session, which will be on the 13th. Oh no, just look as though there is one. Okay, I'm just going to double check. Hang on a second. Oh no, we are booked in. Apologies, ignore that one. I'm not going to give you that link, but I am going to give you the link to, let's just cancel that. Sorry about this, guys. So next week we've got our next intermediate trading clinic, which is called results-based trading learning. I think that'll be really useful. It's the 4th in the series, so if you're not registered for that already, then get there. It's a 2-part session, and it'd be fantastic to see you along, of course. I'm just going to paste that in, and intermediate clinic. I'll send that, so I'll leave that there. So if you go to chat now, you can register for that session next week. So it's on Tuesday, and then the following Tuesday, I think there's a week break between the two. So that'll, I'm sure that'll be a benefit. You get a roadmap, and you can see the Nasdaq is still popping higher. We'll just have a quick last check of the ASX before we leave. There we go. We're back up again over 1%. So we're continuing to shift higher. So that's good. I'll leave that link open for right now. I won't close the webinar down completely, but trade safe. We'll see you next week, and have a fantastic weekend, and we'll catch you again very soon. You're welcome, guys. You missed the Bank of Queensland thing, Michael. I sort of dismissed it. I'll just, I think, if we look at, okay, if we look at ANZ, I'll just quickly go, because you asked the question and then you went offline for a minute. If we look at ANZ as a comparison, you can see there's no upside block there at all. We've had to put in a line there, and we think that there's probably possibly about 5% in ANZ, whereas if we had a look at Bank of Queensland, the problem with Bank of Queensland is we've got this resistance which still hasn't broken through, and they've got lots of noise, so the potential upside on this is around 4%, but could get quite noisy before that, maybe around 2% higher. So to me, the presence of that there makes ANZ more attractive to get in, or Macquarie that we talked earlier, than Bank of Queensland. I hope that helps, Michael, and sorry you missed out on that little section that was aimed at you. You have a good one too. Okay, guys, well, look, use that link that's in the bottom, and we'll catch you very soon. Bye-bye for now.